Hi, this is Mark with your analysis for the week commencing the 15th of September. I am a lazy trader these days. I do not like to sit and watch the screen for hours on end. I like to do my analysis on a Sunday, place orders at the market open, and wherever possible walk away. However, in the summer months that is tricky. You have to be more flexible and you have to be willing to put in the time. Having said that, there are one or two trades this week that I am looking to place at the market open. And I'm also going to show you other trades, potential trades that you can look for during the week. Now you have to be extremely careful this week because it's FOMC meeting and there is a lot of chatter about the fact that the Fed could be starting to talk about tapering quantitative easing. Now it's likely to be highly volatile, and on the theme of my being a lazy trader, I like to be finished by Wednesdays anyway. I strongly urge you to be out of all trades by Wednesday close of play London, because the fact you've got the FOMC statement and then a press conference afterwards, and it is quite likely that it could go hundreds of pips one way and then hurtle hundreds of pips in the other direction. So my game plan for the week is to try to make my pips early in the week, as is my normal practice, and then walk away. Now, I use a top-down approach. I start on monthly charts and I work my way down to daily and 4-hour. And with the monthly charts, I am looking for clues for direction and I'm looking for the overall picture. The thing here with this Euro USD on a monthly, we are stuck right at the point of a potential triangle breakout. And for those of you that are new, the theory goes, you measure the top of the triangle to the bottom. And if you have a look at that middle figure there, there's potentially almost 2,000 pips to come here. And the theory goes that you look for a breakout. Thank you to Omar for showing me how to use this tool after 3 years. A pullback to this area here, and then you're looking for that further move upwards. Now, this is a monthly chart, and therefore you are waiting on a monthly chart, and really at least on a weekly chart. To be conservative, you would wait for a candle to break out and then close out of the area and come back. And if we just quickly flick to the British pound on a weekly, you'll see what I mean. This was the British pound and we had similar scenario, had this triangle set up here. Previous week we had a break and close, the all important close above this trend line that went back to 2012. And the theory of this triangle breakout is we could be on for a 900 pip move here. And the way that you play that, just as I've just shown you, you wait for the break and the close, then the pullback, then the move forward. So what do you do when we're stuck in a situation like this? Well, the conservative trader simply walks away. I mean, what we are at here, we are at the monthly 55 EMA, and look how for the previous 4 months it has failed to break this area. We've had some nasty spikes, but it has not broken and closed above. And this area also happens to be 13300, which is a major area. Now I don't care if this is going to break out upwards or down, but at the moment 13300 is the crucial area for me on this pair. And if I'm going to look at anything, then that is the area I will be looking at. Here on a weekly, you can see conflicting signals, 5-8 cross up, stochastics rolling down. We've got that horrible monthly 55 here, as well as this weekly 200. We've also got 61.8 of a recent move, so there's a shed load of things in the way here. The way I would play this is to wait for a break and close above 133. Let's have a look at this area here. To go long, I would be looking for a break and close above 133.80. So quite a move here, really. At the moment, I'm favouring ever so slightly a short. Unless, as I said to you the previous week when I did the analysis when we were up here, I showed you how I'd look for a pullback around 131.20, which is the confluence. You have this EMAs, you've got the fib, lots of things going on in that area. So a pullback down to here, yes, I will be interested to long. At the moment, intraday, this is not a forward order scenario. I will be watching what happens at 3300 for potential shorts. And if we go down to the daily chart, you can see what happened last week is 3 times running we had this scenario where price spiked but failed to break and close above. The difficulty here is that you also got this weekly 200 in the way. So it's all so messy. Now, intraday, if you're going to sit and watch this, you could wait for a break and close above this recent high. So you're looking at a break and close above 133.30, then the pullback with the move up, or you look for a break and close below the 50% fib and a move down and back up again. But it is not easy on the euro this week. And as you know, the Swissy is correlated with the euro, and the Swissy generally goes in the opposite direction. This is a weekly chart on the Swissy, and again it looks bearish. Now you can't have it all ways. You cannot have the scenario where the Swissy is going to go down and the euro, because if that happens then correlation's gone, which makes me even more wary. But the key area for me on this pair is 9400. I will be interested to short again here, this 93.89, 93.90 if this area breaks, but I would wait for a daily candle. And even then you've got to be careful, because last week, look, we had a fake out and it came up. But a daily candle close, I may be interested in the long. But as I've just explained to you, from these longer time frames, I do not see this as being easy for the euro this week. Pound is a little easier, because I've just shown you we have already broken out of a triangle and potentially we're on for a roaring move. Now it did do a big move last week with no wick on this candle as well, but we're now running into trouble, and trouble is coming in the shape of a 200 EMA here, and then we've got this 78.6 and 160 odd as well, and we've got the whole number of 160. So there's a load of things going on here that really puts me off this pair in its current position. Now if this was to break and close above 160.65 area later in the week and closes above, say after FOMC, pulls back, yes, I would be interested to long. In the meantime, I will not take it in its current position, and then you have to start coming down and looking at smaller time frames and saying, well, okay, where am I going to look to get into this? Now here, 15800 is a whole number, and it had some support and resistance, but it's not the strongest. And really, I'm going to start to move back down here. 157.12, 157.20 seems to be a stronger area, but it's only 38% fib, and it's not the strongest. I like as many reasons as possible to take a trade. If you are trading intraday, then one of the ways to do this is to go down to a 1 hour chart and look for potential trend lines and channels. This then is a very simple setup on a 1 hour chart, and I prefer this on a 4 hour, but at the moment the 1 hour, if I'm going to trade the pound, I will be looking at this setup. This is a channel, and you have the lower trend line and the upper trend line. Initially this trend line bottom one would have been here, and this move was still worth 80 odd pips top to bottom, and therefore you look for a pullback, and again, as many reasons as possible why you will be looking to take a trade. And let's have a look here on a 1 hour chart. You see 158.23 was a previous area of support and resistance. It also, in this area, you have 50% fib and 61.8% fib, and you've got a 1 hour 55 coming up. So if you're going to trade this intraday, it may even be worth, I don't normally do this, and I probably won't even do it this week, but that is one way. Let's imagine you only had one pair you were allowed to trade. If you only had one pair to trade, you would have to look on multiple time frames. This is the euro pound, and one of my favorite pairs. What did we have with the euro pound recently? Well, we had a break of a weekly trend line that went back to July of 2012. Therefore you looked for the break and the pullback. We didn't get the pullback, and the problem has been with this pair is it has been bumping into EMAs all the way down. So previously it stopped at the weekly 55, last week it stopped at the weekly 200, and just below here you've then got the monthly 55. So a conservative trader would wait for a break and close below this 8300 area, which also happens to be this monthly 55. But if you're going to look to trade within the week, well, I'd still be interested. If it pulls back to 8500, I would definitely short, and I will place a forward order for that. If you're going to trade it during the week, then be interested at the weekly 55 for a pullback and again a move down. The other option is 8300 has been a major area of previous support and resistance, and I've shown you many times how on this pair it does respect the whole numbers. It stops at 83, 84, 85, 86, 87. So there is a potential here for a swing trade back up. It is counter trend, and it is not something I would place a forward order on, but I will watch this on a 4 hour chart for a potential resistance reversal at this 8300 area. And as I said to you earlier, 84, 85, 86, all of these areas have been important. And if you're going to look intraday, start looking at the EMAs. Aussie dollar, I'd shown you a couple of weeks ago, I said I was more of a mind, even though the Aussie dollar had been on a big drop, I was more of a mind that price was likely to move back up again rather than down, and it did. But what it did do is it gapped at the open, and surprisingly the gap didn't close, and I missed it. It was very frustrating. I missed it, and it's moved hundreds of pips. Now this one again is tricky at the moment. This is a weekly chart with nothing else on it. What do you do? Well, if you're going to trade it, you've got 8,900 down here at the bottom. If it comes back down again, it's done it twice before, then I would place an order to take a long here. The difficulty for shorting is, well, what do you do, and what do you do intraday? Well, intraday, this is the first time this 55 EMA has broken since May time, so that has some significance. So intraday, you could be looking at 9,200 for moves up and 9,400 back down again. But once again, I go down to a 4-hour chart and I look for candlestick formations, I look for Bollinger Bands, I look for MACD divergence, and once again, as many reasons as possible why I would want to take a trade. A little easier at the moment, I feel, are some of the yens, not necessarily this dollar yen, but this dollar yen, again, we'd had this breakout of a triangle. It's already done most of the move, and here, 2 weeks ago, I was saying to look for a pullback to 98.60 if it broke, and it did. It took a week to do it, but it came down, touched it to the pip and bounced away. This is still an important area, and I will be looking at the market open for a potential long here. If it breaks below, then I'm going to leave it for a while, because I need it then to break below this lower trend line as well, and it's all very messy. Now, we have broken back below 100 rather, and therefore it's all a bit messy and a bit confusing. But my overall bias on this is for the dollar to go up against the yen, and I do suspect that we could be on for some major moves here over the coming months and into 2014. So that is the area for me. You've got 50% fib, you've got confluence of EMAs as well, and it is previous major support and resistance. I prefer a little more conservative is this Aussie dollar yen, and your Aussie dollar yen, you've got 50% fib, 90 whole number, previous major support and resistance. Out of the yens, I do actually prefer this one. It gives it room to have a reasonable pullback and then a move up. And the other thing you've got is you've got potential 170 odd pip move back up to this 200 EMA. So after the yens, I do favour that one. Final yen is your euro yen. This is on a weekly, and look at this on a weekly. It broke the other week and then it spiked off, but in recent weeks, the last 2 months, it keeps coming up, and therefore on a daily chart you could be getting taken out here, but you're getting taken out and losing and losing and losing. The conservative way to play this is do it on a weekly. You wait for the weekly candle to close, then the pullback, and then with a move up. However, if you want to trade it intraday, what do you do? Well, again, it's tricky. It's bouncing all over the place, but we do have a trend line in place here. If we fib this area here, I'm sure this will be a 50% fib by the look of it. 50, 61.8 in that area. So here, you've got confluence of reasons why you'd be interested, and you've also got 130. So I will be interested on that one, but as I've just explained, I do, out of the 3 yens that I look at, I do prefer the Aussie dollar yen this week. Finally, the loonie, the dear old CAD. There was better than expected planning news last week. I still, for the life of me, don't understand how the USD is going up against Canada's economy, because it's in far better health. But from a technical perspective, you have a major area here that I am interested, and I will place a forward order on this. Now, this is a nasty pair. There's some horrible spikes, and it is not for the rookie. If you're new, you might be as well to just demo trade this. But the reason why I'm interested in this trade is as follows. We have a trend line in place. This is a weekly chart, remember guys. This goes back to September. So this trend line is 12 months old. We then have an intersection of 102.60, which was major previous support and resistance. Just above that, we have a 200 EMA, and just below we have got this moving average, this 55 EMA on a weekly chart. So there's a stack of things going on here. And the reason particularly why I like it, you've also got 61.8 fib just below. So as many reasons as possible is what we look for a trade. What I like about this is I would only need to place my stop 60 odd pips below the entry, and that will frighten some of you to death, but ignore it. You still risk exactly the same amount of money whether you are using a 10 pip stop or a 100 pip stop. You simply alter the risk per pip. So I'm risking 60 odd pips. I'm just below the EMA, and I'm also below the whole number of 10200. So I risk 60 odd pips, and my potential gain here is 170 to here and possibly 300 here. So 1 to 3 or 1 to 5 risk reward ratio, I will take it even though it's a nasty pair. So the best, most important thing to note this week is be very, very, very careful about Wednesday, because on top of the fact you've got the FOMC, you also need to be extremely careful with the British pound. They also are having a discussion about their version of quantitative easing. There's a new governor of the Bank of England, and therefore he may decide to mention quantitative easing. However, he has put out a story at the weekend that it's not on the agenda. But again, these are all kinds of things where it's not even just the physical announcement, it's what is said and how it's said in subsequent press conferences and notes that can be even worse. And we have seen FOMC news send price race hundreds in one way, hundreds in another, wiping out stops, trades, heavy losses, and then simply going back to where it all started. So the best advice in that scenario is simply walk away. Have a great week.